Good morning, everybody, and welcome to OptionPit.com, your home from your home for options trading and volatility. Okay. Anyway, sorry, everybody. I've just Mark is recovering from his sleepless nights. So, anyway. Okay, this is what we got. Option Pit. We have, what do we have? This is my course sheet, all the courses you get at Option Pit if you are gold or above. So we have our events, we post them for all our clients, and we have literally hundreds of hours of content if you would like to be a gold member above, plus weekly live sessions. Even if you bought our event this week, which is using weekly options, for 147, you can use that money and you could apply it towards the purchase of a gold course. Okay. If you have more questions, go to our mentoring services area at optionpit.com. We still have some room for a few more people, but this is our best-selling weekly course yet. And no surprise, why is that? Because the VIX is trading where it's trading. 1186, we saw a couple of pops yesterday in volatility. The market tries to sell off a little bit, and the sell-offs go nowhere. The reality is, though, most of the vol products are just trading on just that a little bit of decay every day. There's really no downside, although there's a tremendous amount of decay in the products. Again, in our chat room, we'll look for some longer-term decay positive trades. But the reality is you've got Yellen speaking Jackson Hole again. There's a lot of, I don't know if something was just mentioned, but we're getting close to all-time highs, and we're now 47 cents against that 220 number. Again, the reality is it feels like the market wants to keep rallying because the central bankers are sort of, they're doing their thing, and the market doesn't care anymore. We get over that 220 number, I think we will burst through. We've kind of been waiting for it now for 2 weeks. Possibly, this could be the week that it happens. And we'll see. That's the simple answer. But again, we were looking at time spread yesterday. We looked at something around. I'm going to look at either 219 or 220s again, trying to cover possibly next week to see how those price out. This is just unbelievably cheap. We'll also look for ratio calendars, some trades that we can buy some contracts, sell some forward, and try to get some contracts for basically for positive theta. That's what the market kind of looks like. In the blog yesterday, I mentioned a little bit about the banks. If we do get any issues, let's just take a look at JPM. Again, market at all-time highs, banks not even close to all-time highs. Right? For the year, I don't even think JP Morgan I don't even think it's up on the year. Right? This is last day of the year. Totally unchanged. Obviously, it's paying a dividend. JP Morgan hasn't done much if you look at the XLF. So I'd like to try to construct a pair for us today. But again, with interest rates, sometimes things are so one way as far as interest rates can't do this and interest rates can't do that. The banks seem to be suffering from that. But also that means that a potential change in that means that they can move a lot easier, right? Because volatility in here, just like everybody else, I think you look at JP Morgan, realized volatility, I multi-year lows, I think, in the broad sense, and implied volatility, again, in the broad sense, are very low. So time spreads, ratio time spreads, all subjects we'll try to talk about in our weekly course. Again, you're trying to create something out of nothing, and right now the nothing is we just don't have a lot of movement. So unless you're super selective on what you're purchasing, you're going to have a heck load of decay, and it's not going to be very much fun. So are my ideas versus that also are looking at the financials for a run to the end of the year. This is what I'm looking at. Like to buy that kind of juice. Also, the vol products I think are a tougher trade. I think maybe little shorter term trades in VIX with the level of contango we have are a little bit more exciting. I think we had a blog last week looking at August 13 puts for 30 cents. They're starting to kick in a little now. And again, without a real reason for vol to go up, this is how vol goes lower. The thing is, products like, if you're looking at SVIG, they're going to move every day, but they're just going to inch. You don't really have that, accelerated drop in vol on the downside. A last kind of wild one, Mylan Labs. I think this is a stock. I put it out in our stocks to watch this morning. It looks like Congress is kind of taking aim at these guys over the EpiPen. That did not bode well for VRX. It was kind of the start of a bad thing. So there could be something there. I have a feeling that's why it's down a little bit today. Just the question of if there's any follow-through with that. So just something to watch. Obviously, I don't think we're going to get the 80% or 90% drop like we did in VRX, but still, it is acting poorly on a day when the market's up. And even if we look at IBB is up a little bit. So it's a counter trend. And I think, again, if Congress really crawls in somebody's grill, it's usually not good for the stock. All right, everybody. I'll see you in our chat room shortly.